What's up, guys? It's Cash Flow Cart, back with another video. Today, the topic is the very popular Realty Income Corporation, ticker symbol O. Now, this one has earned the nickname of the monthly dividend company because of its regular payouts on the 15th of every month. So let's get into it. Quick overview for this video. We're going to talk about what this is, what REITs are in particular. We're going to talk about the pros of investing in this security for passive income. We're going to talk about the cons, or just things I like to keep in mind, my opinions and thoughts. And we're also going to talk about, is it at a buying opportunity right now? So what is it? First off, it's a REIT, which is a real estate investment trust. And in order for a company to qualify, it must invest in 75% of its assets in real estate. It must derive 75% of its income from rents or real property. And this is a big one, this third bullet point here. It must pay at least 90% of its taxable income in the form of shareholder dividends each year. So REITs exist to be beneficial to investors, but they have to pay out pretty much all of their earnings each year. And with that being said, you may be asking yourself how they continue to grow and acquire new properties. A lot of that is going to come through share dilution. So that's just something to keep in mind with this one. And I don't see a lot of people addressing that, but do realize investing in really any REIT, you are going to experience being diluted as a shareholder as time goes on and they continue to grow. It must be taxable, minimum of 100 shareholders, and no more of 50% of its shares held by 5 or fewer individuals. So this REIT operates using triple net lease agreements with other businesses. And basically what that means is Realty Income buys properties and they rent those properties out to other businesses. This REIT in particular has over 13,000 properties and counting. Let's take a quick look. They have 13,118 commercial real estate properties. As you can see here in this map, they have recently expanded to having an international presence in Europe, particularly the UK. And over the past few years, they've really focused on expanding their presence there. So that could be exciting for you as a shareholder because now you're getting this global diversification in one security. I want to talk about this here. Non-discretionary, low price point, and or service-oriented retail. And you might say, okay, that sounds kind of boring. Why does that matter? Well, this is a huge focus of Realty Income Corp. They aim to rent out to clients that are going to survive and thrive in any economic condition. Okay. So with that being said, let's take a look at some of their client diversification. So here I've pulled this image in just through their investor presentation, which you can access through their website. Just looking at their top 20 clients, Dollar General's their biggest, Walgreens, Dollar Tree / Family Dollar, 7-Eleven, FedEx. And what jumps out to me about this clientele is that these are companies that are going to be recession resistant. These are companies that are still going to be able to pay back their rent to Realty Income regardless of the economic conditions. And with that being said, it has led to some pretty great portfolio occupancy for Realty Income. Again, this is another slide I've pulled in from their presentation. So their historical median of their occupancy is 98.2%. So that means for every 100 properties that Realty Income Corp owns, essentially over 98 of them are filled and being paid paying their rent on time to Realty Income. So then they can therefore pass that out in the form of distributions to shareholders. And this is really exciting to me as a shareholder of this one, because obviously seeing a higher occupancy, that's going to create more consistency and more predictability in the portfolio and earnings. And, if we're going through a recessionary period, some of these other REITs may have to worry about, okay, is this company going to pay me? It's less likely for Realty Income. So, pros and stuff I like. Excuse me. Stuff I like about being a shareholder of this one. Monthly dividend payments. Okay. I already mentioned this is the monthly dividend company. And you may ask yourself, why does this matter? Why do I need monthly payments? I could just get the quarterly payments. And yes, that is true. But something about getting new capital into your account on the 15th of every month, in my head, it's like now I have an extra payday every single month and I'm free to use that income however I want. So if you want to go out to a nice dinner or you want to buy some Air Jordans, you can. But usually on the 15th, when I get this income, I like to reinvest. I like to buy other stocks. And it's really encouraging. So long track record of increasing dividends. And we'll go back to this presentation. You can see here, they've had 103 consecutive quarterly increases of their dividend payment. That's 637 monthly dividends declared in a row. They are an S&P 500 Dividend Aristocrats member. And this is exciting for shareholders because it doesn't necessarily guarantee that they're going to succeed and continue paying their dividend in the future. But, companies that have done this historically are much more likely to continue doing it into the future and well into the future. Next point I've got here, it has a beta of 0.5 as compared to the S&P 500. And this just means it's going to be a lower volatility investment. And you might say, okay, it's not going to grow as fast, or you might have a number of objections there. But guys, I want you to think of this REIT as truly just an income investment. And if you do get some capital appreciation, that'll just be the icing on the cake. But as a dividend growth investor in myself, I am not really ever looking to sell my securities I hold. I'm more just looking to enjoy the income stream they produce year after year, seeing that income stream step up. It's very exciting. I love passive income, and investing in dividend growth companies such as Realty Income is my favorite type of passive income. Correlation. This is another exciting one. So while you are getting that real estate exposure, the correlation of Realty Income is going to be very low correlated to your other positions, most likely in your portfolio. So that's great. Anytime we can hold different securities that act as diversifiers amongst each other, that can be great for investors. We don't like to be too diversified to the point where we've put losers in our portfolio, but anytime we see a low correlation amongst our picks, it's really exciting. And that's another great aspect of this one. I already mentioned the high occupancy for Realty Income. 98.2 was the median. I did mention how they try to aim for the recession-proof stocks by targeting non-discretionary, low price point, and or service-oriented retail. And then global, I've put on here. I think in the coming years, we're going to see them continue to expand in the UK and Europe and hopefully add other markets. They've also added a new sector with their new investment at the Bellagio in Las Vegas. So now they're kind of venturing into the gaming industry. I'm not really sure how I feel about that because they've gotten to this point by really sticking to what they know, but they are becoming more diversified globally as well as across different industries, and that can be a good thing for shareholders. This one, I mean, holding this one, you'll soon know what I mean. Their website is very investor friendly, and they do focus on getting those press releases out to update us on increasing income, increasing dividends, and it's been a great company to be a part of as a shareholder. And I definitely would love to add more to my position. Okay. With that being said, let's talk about cons or things to consider because, no investment is going to be some perfect golden goose. It's not going to check every box and just be too perfect. Otherwise, everyone would be buying into it. So let's get into this. So, first off, dividends from this and in general, dividends from any REIT are not going to be qualified dividends. So, what that means is if you invest in a company like Apple or Johnson and Johnson, those dividends that you get on your quarterly payments are going to be qualified. And as your income grows and your position grows, those dividends are going to be taxed to you at 15%, which is the tax rate for qualified dividends. However, with this REIT, your distribution income is going to be taxed as ordinary income to you. So that means it's going to fit into whatever tax bracket you fall into. And this could definitely be something to consider. Sometimes when you're comparing the dividend yield of this and you're comparing it to another stock, it's not necessarily apples to apples if you're having to pay more taxes on the real estate investment trust. So, with that being said, if you do build your dividend growth portfolio in a tax exempt account, such as a Roth IRA, then this won't have to be a worry for you. And I've mentioned this here, but I want to go over it again. Share dilution is going to limit your total return potential with this one. It's just math is math. It's the way it's going to work. If a company is continually issuing more shares, as REITs are most likely going to do, then it's going to limit this share appreciation because you're going to be diluted as an owner in the company. Let's look at a quick chart just so you guys can really understand what this looks like historically. So here, this is from macrotrends.net. I've pulled up from 2010 all the way to present day, their shares outstanding. And just by looking through this chart, you can see it's gone up over time is the bottom line. So, like I said, as they increase their shares outstanding, that is going to kind of put a weight on your shoulders if you're looking for total return from this. It is necessary, though, as they are required to pay out a certain percentage of their income to reward shareholders. The next thing I've put, interest rates are in control of this one, guys. And this year we've seen higher and higher interest rates. And as we've seen across really the entire real estate sector, it has not performed very well relative to the market. So in a situation where interest rates do drop, this will allow Realty Income to get capital for cheaper and it will allow them to grow. But as of right now, in a high interest rate environment, they have to be much more selective. And also, investors are certainly driving the price of this one down year to date. Next point I've put no moat on here because essentially in this industry, there is very, very little barrier to entry. Basically, what I mean is anyone can buy a building and sign an agreement with a company to rent it out. However, for what it's worth, I've also included the weighted average lease term for this one. So the weighted average lease term for Realty Income is 9.6 years. And the way I think of this is there isn't a moat in this industry, but this kind of acts as a moat to protect Realty Income's future cash flows. As you can see, half of their leases don't even expire until 2032 or later. And guys, when these do expire, as you can see every year, we have a different percentage of their leases expiring. what's most likely going to happen is those businesses are going to release with Realty income and hopefully at a higher rent payment, but we'll see how it goes. Let's go through a few visuals, and these are visuals I want to show that I've actually created myself. So without further ado, here we are. So this is a new visual I've kind of been experimenting with, but essentially I'm looking at 10 years of data and I'm charting the price increase on a percentage basis, and I'm using the dividend increase on a percentage basis. And I'm kind of trying to identify if the two interact. So I've pulled this data from Yahoo Finance. You guys could definitely do something similar. And then actually what I've charted are columns C and E, which is just strictly focused on the percentage increase of the dividend, percentage increase of the stock price. So let's look at the visual. Here it is. So this orange line here is going to represent the percentage change in Realty Income's dividend from that base year of 2013. And it's going to work the exact same way with the stock price. So as you can see, there is kind of a theory that this dividend increase on a 10-year basis can act as somewhat of a price floor. And just looking back, there's been in 2018, obviously the COVID dip in 2020, we have seen the share price of Realty Income kind of come down and bounce off that price floor. If that is a theory that could hold true, then right now, historically, we could be at a good entry point. Not to say that this couldn't go lower, but with this price floor theory, it looks like a decent price to enter. With that being said, quick disclaimer, this is one model, guys. This is not meant to be used in isolation. It's just been something I've been looking into lately, and I figured I'd share it on my channel. One other visual here. So here I've charted the trailing dividend yield of Realty Income going back from 2013 all the way to present day. And this orange line here is the 10-year average. So that's the average of the whole thing. And then the gray line, is the 5-year average. So as you can see, right now, Realty Income's yield is sitting higher than both its 5-year and 10-year average. Is this necessarily a sign to enter? No, but there is a dividend theory that states companies are undervalued when they're trading with a dividend yield higher than their 5-year average. For what it's worth, you could lock in a better yield now than you could have dating back all the way to 2014. So let's move on. One more thing, guys. Sorry about that. Going back to this model I showed, after I calculate the percentage change of the price and the dividend, I essentially take that base case and I multiply it by what the dividend increase has done over that time period. And I come to a price floor, per se, of $57 for this one. So what that means is in this model, the stock could be undervalued if it's trading lower than that price floor. So let's look at the chart really fast. So here it is, Realty Income. You can see the all-time high here is at 85 a share. And then the recent low was the COVID low was 38. Right now we're trading at a price of 54.10. And like I mentioned, that price floor was around $57. So that could potentially offer some upside potential in terms of share price appreciation, but it's really up to you. For this one, I just want to say it's very important that you are selective with your entries because due to the share dilution and limited upside potential, there's not going to be as aggressive growth in the share price as you might see in, tech stocks or other high growth industries. So guys, if you want to add this to your portfolio, It is very essential that you do your research, you watch this. I would stick it on a watch list, and I would just put in a dollar amount where you are comfortable adding and starting your position in this one. Again, guys, thank you for tuning in. I hope you enjoyed the video. And if you did, feel free to like or comment. And other than that, have a great rest of your day. Thank you, guys.